Hello, testing. Okay, testes, testes. 1, 2, 3. Sorry, that's my favorite. All right, so ignore all this mess. I wanted to go over trend lines, and this is what it looks like when you actually use trend lines on your chart on a higher time frame when you use them on lower time frames. So what we'll do is we'll get rid of all this. I'll leave that one because that's being used right now. Okay. So, trendline rules. The way this works is, let's move this out of the way. I'm trying to find my other chart because that's where the interesting price action is. Boom. All right. So, the way trend lines work is that you want to draw your trend line. I'm going to use this back here first. You want to connect from the bottom lowest point going up, and you kind of want to find multiple wicks that you can connect to. And so in this situation, something like this is good. But really, the main one that I want to look at, because this is an uptrend, is the up line. So really, you want to draw your up line first. So if I take this last high here before it dips down into this channel, right, and I draw it out and I connect it to this next wick right here, then that gives me a good straight to work with. And so here's where most people, they draw their trend lines individually, and that's where they mess up. What you want to do is you want to copy the one that is the important one and paste it, and then we're connected to the bottom, and then that's your trend line for the bottom, right? So there's no room for error there, and you got two perfectly parallel lines. Now the thing about trends or trend lines or channels, I guess you can say, is that price has a set of rules that it must follow. And what you want is you want price, when it gets into a channel, is it wants to explore the high and the low, right? So obviously you have a high, you have a low, or you can start down here, you can say this is the first one, and then that's your high there, right? And so it needs to touch in order for it to count. Okay, now there is some candlestick analysis that you can do to I guess keep going, or whatever. But the main thing is that it touches the bottom, it touches the top. If it touches the top, it needs to touch the bottom again. If it doesn't touch the bottom, it turns around and goes right, try to touch the top again. If it can't touch the top, then it comes around and touches the bottom. So it sounds simple enough, right? So we've got a touch down here, we've got a touch up here, come back down. We don't touch down here. Well, it tries to go up again, and it doesn't touch up here, so then it has to come down, right? So then it comes down, and it touches down here, and then it has to go up. It tries to go up, it fails to go up, so then it comes back and touches the line, right? Fail 1, you touch the line. Fail 2, you come back to break even of this candle, or the last one that touches the line. Fail 3, if that's not dropping you out of the channel, it drops you out of the channel and you break it down and you go lower. All right, so boom, you touch the channel, you go up. You fail to hit the high, but you're above all your other wicks here. You closed green here, so you're bullish. You get another go at it. This candle fails to go up, but this candle closed above this wick here, and it's it's got a wick above it, and it didn't close underneath all this, so therefore it's still bullish, right? This candle closes above this candle here, so therefore it's still bullish. And then you get to this candle here, it still closed up here, but it closed inside the wick of this candle, meaning it couldn't even get past. It's not as bullish as it was, which means it's losing momentum, and therefore it comes down on this candle here, which brings you back to here. But remember what I said, first fail to go up, you touch this here, and since it hadn't been back to touch since this candle here, it has to come back and break even to this candle here before it's allowed to even try to go back up. So how do we use this? In this situation, it doesn't look like there's a lot there, but it actually is a pretty decent amount. So if you take from the high here, right, let's say you see here it fails to go up and it's inside this wick, and you just place your order right here at the top, and then you come down to the base of this candle right here, that's 25 ticks. Well, on gold, that's $250 on one contract. So that's the market for most people in one day. I get about 460 to 650 is what I'm trying to get usually. And so this comes all the way down to the last place that it touched on the candle, because that's the last support that it had created right here. So I'm going to put a circle here. Oops. All right, and so then here you are. Look, boom. Everything is touching right here, and this is like your ground zero basically. Now, after it hits this area right here, then what happens? It needs to go back up and get inside the channel again. So that's what this candle is right here. This candle fails to get back up to the channel altogether, but a lot of times you'll see this get to the channel and like wick it or something like that, and it might try to give it another shot but then fail, and then turn around and dump right afterwards. And that's why the candle behaves like that, is because it failed to get back in. Well, why does this work, right? Why would this work? Why should we listen to you, Scott? Like, or wait for it, or whatever the fuck you want to call me. But, you know what I'm saying? Like, why? And I'm nobody, right? But, you know, the reason why this works is, if you think it like this, the reason why price moves in a channel is because of time. All right? When you're in an uptrend, that means you're going against time to try to make profits. When you fail to continue to go up, that means you drop out of the line there. Hold on a sec. There's something here and I can't see it. Hello, Trigger. I always miss you when you come in. I just happened to see it make a weird move. I just saw it like glitch a little bit or something, like something moved. Hopefully you're still here. I gave you my email. I don't know why. I don't know if you ever see it or not. Anyways, I got my arm right in the thing. Sorry. So, message me if you see this. I try to keep the chat. I thought I had the chat up to where I could see it and at the top of the thing, but it obviously is only showing the part where I can't read it. So, anyways, the reason why channels work is because when you're in profit mode, you're moving up, and when it fails to move up, then that means you're losing time to come down, right? Well, how do you get back in line with the amount of profits you would have been making? I do remember you. Every time you come on, because whenever I'm filming or streaming or whatever whatnot, I never have the chat up so I can read it, and then I always catch it too late. And so I tried messaging you on one of your videos on your channel to tell you I was sorry. But yeah, I remember you popping in all the time. How you been? So the reason why whenever you fall out of a channel, it means that you're spending more time going down and not going up and making profits. So in order to get your profits back, what happens is when you fall out of your channel is that you want to get back into the channel. And so that's where you'll see this channel pull back up later into the future here when price gathers its thing, itself, and gets back on track and gains enough, because right now it's accumulating right here, right? It's trying to build a base and accumulating at the same time. And so that way if it slips, it comes back to here instead of having to go deeper like this did over here, right? And so we just fell out of a channel from back there. And so now our goal is our first step is to get back in this channel, so that way you can, set up to go and get into the previous channel that we're in before that. You most likely probably won't get back to that one because it's so far up there. But there's channels like this everywhere, and they're always trying to get back into them. So that's why this would work. That's why these rules work. That's why trend channels are important. That's why that's why you can build something off of them, because they're using it to get back they get back the time that they wasted for the profit. Same thing with the downtrend. If they're trying to bring it down and it ends up going up, they end up dumping it to get back into the channel down here. See, and so this is a channel, and you can also gauge how bullish or bearish it is. Like you can see, like it came out of this channel. Like it looks like it was never in this channel, but it was in this channel for a long time, right here. And so then it came out of it, and that shows you that it was somewhat more bullish at some point. And then it brought it back down and put it support right on top of this this area, and then it started bouncing, and so it kind of created its own channel, you can say, like this. And then so if this is going down, you obviously want the bottom one is the more important of the two. You put this at the top, wicks out the high here, comes back inside, bounces off the bottom, breaks out of the top here, comes back down, fails to get back in right here, right? And that's when it becomes, it starts a new channel basically. And then you see it coming down again right here, and it fails to get back in, and it's bouncing around this area. And you could make a channel, and I've got boxes everywhere. So what's new with you? How you been? But this is just a reaccumulation pattern. But you could put a channel in here, and so there is like a range, I guess you can say, or I don't know, like a I don't know what you would call this, like a what do they call this? God, we used to use it in our club all the time, and I can't think of it now. Levels. You can use it as a level, but like a bigger, like it gets trapped inside the level. And so what happens to price when it gets trapped inside of a level? There's a whole nother set of rules there. When it's going flat. And so I told you about the trend line channels. Let me finish that. I'm bouncing all over the place. So when you're in a channel, you want to hit the high, you want to hit the low. When you fail to hit the high, you come back to break even of whatever was the last candle that hit the level. And if you fail to get back into the channel, or hit it again, hit the high again, you fall out of the channel. And then once you get back to level here, right? So like this is fail 1 right here. It failed to go up, so it comes back down, hits the bottom of the channel. Fail 2, which is this up here, drops out of the channel and gets to break even of this last candle that hit the bottom level here. And then what happens after that is it tries to get back in the channel. If it fails to get back in the channel, sometimes they print 2 or 3 candles right here going up. You'll see it drop, and once it closes underneath all that, it's going to dump. And so then once it fails there, then it dumps past your low that you were at before, and I call it spilling out or sputtering out. And so it spills out, boom, and you see how it makes lower lows here. Boom, boom. And then it starts to try to reaccumulate and try to build its strength back up to take off and get back up into this channel. And so that's how channel rules work. Now, if you get inside of a range, what you do is you want to frame the high right here, frame the low, right, which was here, but then it came down and did another one low right here. So this is your, technically, that's your low there. All right, so frame the high, frame the low, and then retest the middle, like find the mean, right, and then break the low. Boom, it broke the low here. This is to grab liquidity, so you've been building up a liquidity from here over to here, which is about 17 candles, which is half a cycle. And then once you've cracked the low to grab that liquidity, you can try to take off and hit the high again. If you fail to hit the high, you come back and retest the mean, and then try to retake the high. If you fail to go back up again, then you dump down, break the low again, grab more liquidity, pull back, test the mean, try to find support on it, try to break the high again. If you fail to do that, retest the low, then retest the high again. Whew. So now we move forward and you can see, grab liquidity here. We failed to break out the high. We came all the way back down to the low. Like I said, it didn't crack the low here yet, but it did come down to the low, and now it's going to retest the mean and end up probably coming down and cracking this low here to grab liquidity. When it grabs liquidity down here, it most likely will try to go back up to the high and break out. If it fails that time, then it's most likely going to dump below this. So here comes our chance to come down. And so how does this work for us? Well, it helps us set up our move, like our timing, so we're not just jumping in every time it turns around and looks green here, right? So you look at your move, and this should come down and break this right here and just grab a little liquidity. And what I'll do is I'm going to go ahead and get my order ready. I'm going to put it right on the edge of this. Wow. If only I can click, right? Now it is getting underneath this one candle right here. This might be enough for it to go, but here it is right there. That's it. Bye.
Order submitted. Order filled.
Alright. Let me grab this. Now it can come down deeper than this because it didn't go anything on this one right here, so it has to crack this right here. But that should be good enough right there. If it does come down and get me, I'll just readjust and get in again better. But the whole idea is to kind of reduce your amount of exposure. Now, it probably would be better to have 3 wicks here before you get in, because that would protect you from it going down deeper on you. But this does look like it's possibly could break out from here. It needs to go past this wick of this candle here. It just did it. So that way if it comes back down, we should be protected, because it should try to stop somewhere right here in this level. And so I'd like to talk to Tori trades about what I see, and see if she has anything that she can add to it, or what she uses, because she doesn't really ever talk rules, but I have rules that I've made from watching the market. Everything I just told you is my rule set. I mean, look at this trade. Look how easy that is. That's all you have to do, is you just have to find it when it's reaccumulating. Find the reason why it's reaccumulating, which is the downward trend that came out of it, that tried to, go up and it ended up going sideways, which means it was reaccumulating. And then, find your way to get in. So I'll recap these rules for this, so you'll know how to use them again, and it'll be written out for you. It should try to retake the high here. Now it could come down and retest the mean right here after getting out, and if it's super weak, then it can come all the way back down and retest this low, and then turn around and go back up after it wicks this low. So see how it didn't go very high here? This could be an opportunity for it to come down. It's 29 ticks. I'm not stupid enough just to watch it disappear. So I'll probably just take my profit right here if it starts to come down. The idea is not to be super greedy and watch all your profits disappear. The idea is that if you can get a measured move to give you 20 plus ticks, you should take it. And then it's time to, I basically just showed you live exactly how you would take this trade and how you would set it up. Now I'm going to say that I should try to use this more often, because I have so many things that I see and try to do that it overcomplicates things. But this was a prime example of exactly of how you should use this. And this is more like channel rules, or I don't know, like a range rule rules on this one. The other one was channel trend rules or whatever you want to call them. I don't know. Trend channel rules. There you go. So like again, we should be getting up here to the high. It should break out over it since it failed last time, but we did go here and grab more liquidity. So this should take us all the way up. I do have my own ATM strategies. If you guys are interested, I can share my email. Like there's the high right there. It shouldn't fail right here, but it just did wick it, so it might pull back just to retest the mean before it breaks out, which I don't want to be any part of, because that's exactly where I wanted to be, was right here. And if I was smart enough, I would have had a target up there.
Stop filled.
Alright, so there you go. And there's my trade. It was easy and painless, right? So there you go. I just made 460 on that account, 510 on the other one. The other one was a lot harder because I was trying to do something else, and again, I just know all these different things. I just try to use the ones that work easier than the other ones. But I don't know, my brain's it's overcomplicates things. It makes it really noisy up there. So anyways, but these are the things that I see with my acquired savant syndrome for my rec. This is the result of like one of those things. But to cover this rule set again, whenever you fall into a range, whether you're coming from the top or the bottom, the first thing you want it to do is you want it to frame the bottom. I say frame, which means that it touches a high, it leaves a high, and it leaves a low. And so if I was to get rid of, let me lock this, let me lock this, like that. Alright, let me get rid of everything else. Well, what in the world? Alright, so I got rid of my box. First thing you want to do when you fall into a range is you want to go ahead and frame the high, which is just take your highest high and your lowest low, right? Which would be after it hits the high, because we're basically trying to go up. So the most important part of this channel is the upside. So we always start with the most important side first, and then you use that to create the bottom. So what's next after that is the low that it frames, which is this guy right here, and then we leave it there, right? And so I just scroll this over that, and then if you have NinjaTrader, you can just right click and send to back, and that puts your candles in front of it. And we're just going to go unlock that. Now when you frame the high here, we're looking to break out here, and we know that anything that fails to break this high is going to end up coming down. So there's a different kind of trade you can find there. And I just didn't put this right. There. Okay. So now we frame the low, and now any move that comes down here, it needs to break this move in order to grab liquidity, right? This is just a different way of looking at like what Marco talks about, and that's liquidity. Marco's from inter-equity trading, but he's huge on liquidity. And so by placing this wick down here and stopping and then putting these 3 wicks right here next to it or 2 wicks next to it, you just built liquidity underneath this spot. And every time you place a bar, you're just building more liquidity because there's more trades being taken every time it comes down. And so this first move purges this liquidity right here, but look over here, you still have this area over here as well. And so if we draw lines, which I don't think these get taken out yet, from here to here, they save these for in case like you really can't break the high. And so then we'll take and put one here as well, because now we have liquidity underneath this area here from where trades have gotten in, and are going up. And so these are our 3 lines of liquidity. Now you see this fail right here. This is a short, and so the best thing you can do when you're trying to trade this is to forward look at this and say, okay, I'm getting close to the high of this, right? It's my first time getting up here. I'm 99% sure I'm not going to break out first go, right? Usually it just doesn't happen. I'm going to fail and then I'm going to come down. So what you want to do is when you get close enough to where a stop is like a really small stop is able to be squeezed in here, what you want to do is you want to see a candle close that close to the high and then go ahead and enter a trade, one tick above this, so that way if it or right at it, like if it goes up, if the candle goes up, if you have your context menu open already like this, I'm on that line, I can do sell limit 1 right here and it throws it right on that candle right there, and so then when it soaks back down it gets me, right? Or you can do it the other way around, put it, one tick up or whatever, and you can have a stupid low risk, right? Your risk could be at the top of this channel right here. You're talking about like 1-2 ticks, and so that's really what you want, is you want the lowest risk possible, and that's where these range rules really come in and shine. So all right, first thing you want to do when you come into range is you want to frame your high and your low. Okay, so I framed the high, I framed the low, and now I know I'm going to come and bounce and grab this liquidity and try to take out the high. All right, I grab the liquidity. This move right here tells me it's going for the high. I know it's going for the high because it did this. It's going for the high and it fails. I'm almost 99% sure it's going to fail on the first go here because it didn't really grab, it only grabbed liquidity from this one move right here and it didn't grab all this over here. So it's almost certain that it's going to go up and fail on the first go, right? So you either have a trade here going up, which is, again, if you put it right at the edge of this range box, that's 50 ticks, dude. I mean, I don't know any. If you can't make a living off of 50 ticks, like watching your trade and all your profits disappear, and I love Marco. I love what he does. I love everything he does. Um, his liquidity is rules, or like how he does liquidity and everything, how he sees it is like brilliant, right? But I can't stand watching price action disappear just to get a bigger run. Like, like find a solid trade that you know you can get the amount of money that you can get out of it without having to watch your profits disappear, right? And just up your contracts, right? I mean, like, yeah, he makes stupid money on some trades, yeah, but it might take like 8-12 hours or something like that. I, I just find another trade, like, I don't know. But that's just that's just me. I'm just built different. I just haven't gotten to the point where I can watch something like that and be like, oh well, fuck it if it doesn't make it. Like I can't do that. So this is telling you it's going up. That's 50 ticks, right? This is telling you it's coming down. That's 50 ticks going the other way, right? So that's two 50 tick trades right there. That's 100. That's 100 ticks right there, all because we just did this framework right here, and these were almost guaranteed because we know that it's very rarely that it's ever bullish enough to break out of here on the first go. Very rarely. So it's going to go up, fails to hit this, comes back down, breaks the low right here, and grabs the liquidity underneath this guy right here, right? And it still didn't even touch this area right here. And so there's still liquidity right here. And so we know for future reference that there is liquidity down here if it fails to go up. And then, boom, it hits this. We know we got a 50 plus trade going right here, unless it just absolutely is not bullish at all and it can't get back up there and it fails to go up from here, right? But we do have 3 trades, and this one was a bear to get through because this is where they get their money, right? This is where they're just gonna churn you for your shares right here. Is this price action right here, like this, where it's up and down, up and down, up and down. All right, so let me finish these rules, right? So we get rid of that. All right, you're gonna frame the high, you're gonna frame the low, and then it's going to go up and retest test the mean. Steal your liquidity, right? Come down and grab liquidity. Do a double inside turn, but test the mean again. Basically, retake the high of the mean, or take the high of the mean, which means that it's going to come up and kind of fail here. This is what I call a double inside turn, where it fails to get to the high of your last move. It's like a reverse pain candle, and it fails to get to the low, right? And so it's an inside candle basically. And then once it does that, it makes a much more powerful move to the upside there. If you go high and then low, that means it's going to be a powerful move to the upside. If you go low and then high, it's going to be a power move to the downside, because you're basically compressing that move and doubling it. And so, boom, you go up from here, and it's gonna, after you retake the mean, you grab liquidity, take the mean, and then you're gonna retest the high. When you fail to retest the high, you're gonna come back and retest the mean right here. So that's what this is here. And then if you fail to, once you retest the mean, if you fail to go back up again, which is what this guy is right here, you're going to drop down and retest the low, right? And so boom, you drop down, and you've got this trend line going across here, so I drew it so you can see why it's bouncing right here and it's taking so long. Boom, 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 you're coming down, you get underneath the mean, you retest the mean, you're still not getting through it, you drop down, you hit the low, you grab more liquidity, and then you try to retake the high again. And on the way up, you might come back and retest the mean again as you go up. Boom, that's what this guy was here, is went up, and it just kind of efficiently goes and pushes back down into the mean. Boom, and then shoots back up. So dead center right here. And then tries to retake the high. Fails to take the high, and it drops back down. What did I say before? I said that it'll drop back down to the mean, try to retake the high. If it fails to go up off the mean, it's going to drop back down to the low, and it's most likely going to go deeper. And then, depending on how many times this is tried, it might go so deep that it might try to get back into this trend line because it's failing to go up. Like this, typically it'll make it right here, but if it does do this on this first time it does make it out, it's coming down to here to grab more liquidity and turning around and going back up. If it fails to do it that time, then it most likely will probably do like a liquidity grab here and then drop super hard right there, because you see like it's built like this little ledge of liquidity right here now. It'll come back and purge that and then dump, because if it can't get it from doing this again, then it's going to dump hard. And that's it. That's your rules. It's going to do that every time, because it's just how it's like a rhomba, right? I don't know if you know. A rhomba is like a vacuum cleaner that runs on electricity. If it has charging ports on each side of this range, it only has enough energy to go so far, and then it comes back, right? And so it's like it comes over here, it hits this, and it bounces back, and it charges here. It comes up here, and it ran out of energy because it wasn't as clean a path, I guess. Boom. And so then it comes back down. And then it runs up again. It almost makes it this time, but then fails. And then it has like a super long, hard time trying to get back. So it has to go deeper, right? And so if you think of how much charge it gets is based on how deep it goes on this, that's where the charge is coming from. And so boom, it comes and it goes deeper, and it gets, so this time it can go all the way over